Jesse here, and today I'm really excited to bring you this video. Now, I know it's not part of my journey to 150K because I've had a lot of requests and comments asking me if I could make a beginner's stock picking video. Very simple, easy to follow, and something that's beginner friendly that can help anybody who's keen on picking their own stocks get a better understanding of the research process and the thought process in terms of stock picking and how I go about picking stocks. So that's going to be the topic of today's video. And we're actually going to talk about this stock picking 101 guide and how I pick stocks using an example that I did in the past, which is when I picked Boingo and I did that deep research, deep dive on Boingo Wireless. Now, obviously there was a bit of volatility in the market overnight, but I've already taken the screenshot, so I didn't want to, redo it and re-talk about it. But it was standard volatility. So if we exclude last night's volatility, as you can see over here, the stock Boingo, I found this back in October, November last year, and it sort of went up about 45, 48, 50% in about 8 months, right? So if we can use this process, which I'm still trying to refine and, improve over the course of the coming years, to consistently pick companies like this, then you would easily be able to beat the market and compound your returns over the long run. Okay, guys? So whether you're doing a long-term buy and hold or sort of my strategy, which is finding winners that'll go up in a short amount of time, as long as you compound the winnings on top of each other, that's sort of what really matters. Alright guys, and before we get into today's video, I just wanted to make a special shout out and say a special thank you to my broker Hatch. And I'm currently in the process of shifting my funds from my previous broker, my old broker, which is a Big Four bank, over to Hatch, okay guys, because I love using the service. They've got a great team, and we've got an awesome Facebook page of about 4,000 odd investors where we regularly discuss stock ideas and give each other feedback on our picks. And today I actually wanted to talk to you guys about the unit economics of, also one of the reasons why I made the switch. Because as you guys know, New Zealand is a smaller country, and the banks have, the Big Four banks have traditionally held a massive monopoly over it, okay guys? And so what that means is, prior to Hatch coming along a year and a half ago, I was stuck paying $90 a trade, buy or sell for US stocks, okay, versus $3, the difference is night and day. And so what I've done is I've actually put together a quick calculation of the unit economics for you in terms of why this adds up over time, okay? $3,000 invested with Hatch, because my typical buy sizes are $2,000 to $3,000. That's only 0.1%, okay? You go with the bank, $90. I won't mention the name of the bank, okay? It's absolutely insane. That means you've already underperformed the market by 3% before you actually start to see any returns on your investment, on your hard-earned money, okay, guys? And so, there's two ways to make money, right? You either make more money or you spend less money. And in terms of the magic of compounding, if you make more money and you spend less money, and then you compound that over time, you are away laughing, and that really affects your returns over the long term. All right, guys? So if you guys haven't already and you're still using your bank paying, crazy amounts of money, I've got a link for you below. If you sign up for Hatch through that link and you make your first $50 or more worth of your first investment, then you will get $10 towards your Hatch account. So $10 credit, that is 3 1/3 free trades. So, again, it all adds up over time. So guys, in terms of helping you understand my thought process and research process for picking stocks, I'm going to make this in very, very plain English. So I don't use any ratios. I don't use investing jargon, so none of that whole sort of discounted cash flow, weighted average cost of capital, intrinsic value, all of that, right? All of these sort of complex terms. What we're going to be focusing on is we're going to be focusing on the business, and we're going to be focusing on economics. And that is all I'm going to share with you guys in today's video. All right, so let's get into it. Okay, guys, so the first step when I look for a stock that I'm, looking to buy or I think has potential to be a winner is the following. I use a simple stock screener, and all I look at is two things, and only two things. That's all I care about. I care about what the market cap is, and I also care about the 1 year change, okay? The reason being is because the 1 year change, to me, shows me sentiment. because my understanding is sentiment drives stock price. Now you guys can say earnings drive stock price, but obviously it doesn't, because if you saw what happened with the crash, it went down and it went up. Okay, earnings did not change in the space of 3 months. Okay, sentiment did, and that's what I invest on. All right, and then in terms of the market cap, you don't want it to be too small because it could be, pretty dodgy, right? So look, over 300 million is good. There are some exceptions, but this is my preference. Okay, guys. So in terms of Boingo, before I found it, and as you guys can see here, I've covered out the right side of the screen, and the reason being is because, obviously some time has passed since I found it, okay? But when I found Boingo, I found it sort of around here in terms of the early, mid-October last year, all right? And by that time, the stock had already tanked 50+%. However, if you look at the actual, the chart, and the chart is very important for me, okay, guys? Because what I want to see is I want to see a divergence with which way the business fundamentals are going, right? So we're not talking about PE. We're talking about their their sales, their gross profit, and their operating profit and their net profit. Okay, guys. So if we have a look at this, you'll notice that the fundamentals are heading in the right direction, and the stock price is heading in the wrong direction. Okay, so what this tells me is that for some reason, sentiment on the stock is not very good. So all I need to do is find out if it's the right reason or the wrong reason. If it's the wrong reason, then we've got a winner. Okay, guys. Another example. Okay, we'll have a look at another chart. So what I look for is stock prices that are like this with the fundamentals that are like that. And that is my basic, very simple step one in terms of how I find a winner. Okay, guys, because expectations is what drives share price. Okay, the missing of expectations is what drives it down, and the beating of expectations is what drives it up. All right, very, very simple. Okay, step two, guys. So step two, now that I've identified what I think could be a winner, I then look at the 1, 1.5, 2 year chart, and what I'm looking for is all of the different times that it either went up really sharply or went down really sharply, right? Because I want to understand what the market is buying the stock price on and what the market is selling the stock price on. And the reason being is because if, based on my research, based on the business and the economics of this business, right? I'm not just talking about their business, I'm talking about their customers, their customers, their network, the sector. If I believe, based on my research, that there is a high probability that the same news which drove the stock price up 50% in the space of 2 months will occur again, then, obviously, when it's at the lows, and if it's going to occur in the near future, then it'll most likely drive it back up. All right, guys? So what I'm looking for is I'm looking for the news, okay? I'm looking for why it went down, why it went up, and, what's behind it, okay, guys? I'm also looking for whether this is just anecdotal or whether there's actually something materially or fundamentally wrong with the business. Okay, guys? So as you can see, I use different news article sources. I look at the previous earnings calls. I look at the questions that the Wall Street analysts are asking. And also, I look at what they're expecting. Okay, guys? And see, whenever I see this, okay, guys? Now, if we look at what's circled in red under the EPS, you can see we've got 5 Wall Street analysts, okay? The high expects them to deliver an 8 cents profit EPS, and the low expects them to deliver a negative 42-cent loss, okay, guys? So I like this. And the reason being is because when Wall Street doesn't even know what's going on, then nobody really knows what's going on with the company, which tells me that there are some real inefficiencies happening here, right? There are some inefficiencies because if you've got the high estimate and the low estimate being this far apart, then really nobody has a clue. And that's exactly what I'm looking for. People who haven't done the research that have sold the stock off, okay, guys? And because that means that they'll also buy the stock up without doing the research, which is where, I profit, all right? Okay, so now that we've done step 2, we're going to go to step 3. And step 3, this is probably the most labor-intensive, sort of complex part of my research, okay? So this is the most painful part of my research, and it involves a few different parts. So the first part over here is I'm looking at the company's past performance, okay? I'm looking at how often they beat and how often they miss expectations, because if you guys think back to the beginning of the video, okay, beating of the expectations drives it up, the stock price missing of the expectations drives it down, okay? And if a company, let's say Boingo, for example, beats 85%, 90% of the time, then the likelihood of them being able to beat again is high, okay, guys? Because what this shows is management has the capacity to execute on what they say, okay? And that's good, okay? I like management who are consistent because this is important, okay? And as you guys can see here, I will always read the transcripts, look at the slides. I don't yet look at the 10Q because I'm still trying to get an understanding for, why the thing has moved, okay, guys? So I look at the slides, I look at the presentations, I read the transcripts, and what I'm looking for is I'm looking for reasons why news won't be bad and why the next earnings calls will deliver better than expected, okay, guys? So keep calm because no bad news is good news, and that will also send the stock price up. All right, guys, so in terms of Boingo, what I found is, okay, and again, this is still what management say, okay? So in step 4, I'm actually going to try and corroborate that with independent evidence because management always tell you how good things are, okay? But I'm looking for things that are really, really interesting, okay? So they claim that they have a 42% win rate, which is 4 times higher than the next biggest competitor, and that's huge, all right, guys? So if that is true, and they keep doing the right things, then that's going to drive the stock price back up. They also, okay, and again, I'm not looking at the GAAP metrics, I'm looking at the non-GAAP metrics, okay? Things that you cannot measure with a ratio. So in terms of Boingo, they're DAS nodes, and the reason being is because the more nodes that they have, the more revenue they get, okay? Because they offer, Wi-Fi, they offer offloading, they offer all of that, and so the more nodes they have, the more money and more profit they make. And so as you guys can see, there's a growth in the fundamental underlying drivers of what makes their business successful, okay? So again, I then take that information and I keep that in mind for my research in step 4, okay? And also, I'm looking at here, I'm going, long-term contracts with the, with the Army, with the Navy, or the, obviously the government's very stable, right? So good, stable clients, revenue shouldn't sort of go like this too much. Again, this is all useful information, all right, guys? And then what I do is I then go through the earnings calls and I highlight all of the important bits of information that I think I need in order to come to a conclusion as to whether, this thing's going to go up or it's going to go down, okay? So as you guys can see, I regularly make notes. So over here highlighted in red, these are extracts from the earnings calls, and over here in bold, these are my comments to myself, okay? And as you guys can see over here, I've said, all right, maybe it's some kind of delayed revenue recognition, maybe it's depending on venues that go live. So I'm slowly starting to build an understanding of how the business works, how they make their money, who they serve, and how they recognize their money, okay, guys? So this is very important. Again, I'm going through the earnings calls and I'm highlighting the key terms that I believe I need to understand the business, okay? So as you guys can see over here, DAS nodes, backlogs, number of connects, number of carriers. That's very important because they partner with the big carriers in the USA, okay? Number of military beds, because obviously they're serving the Army. So, soldiers need to sleep, they need to use the Wi-Fi, average revenue per user, okay? So these are all important key business metrics that the ratios do not tell you, but are very important to helping us determine how the company is going to perform over the coming, say, 3, 6, 9 months, all right, guys? All right, then once I've put that information together, I then have a hypothesis, okay? So this is my hypothesis. Again, this was old research, so it's changed a little bit, but this was my hypothesis on Boingo. So I said, okay, if Boingo can do the following things, okay? So if they can maintain the growth rate at 10% or more, okay? If they can sustain their profitability, etc., etc., if they can ensure that their free cash flow or whatever it is goes, stays at a certain level, then I think that there is a high probability that on the next coming calls, the share price is going to go back up, okay? So now I then need to validate my hypothesis, okay? So I've got the hypothesis, now it needs independent verification, not from management, okay, guys? So now Now that I have a hypothesis, I then deep dive into the numbers. Okay, guys, so let me just take you to my spreadsheet and talk you through what I'm doing. And this part is absolutely painful. Okay, guys, I'm not going to lie to you. This part takes like hours and hours and hours, but it must be done. As you guys can see, we are in the margin spreadsheet, and for every single company that I'm very, very, very bullish on, I am looking at, these things. Okay, guys, so I look at the gap. So I go back 4, 5, 6 years, how many it takes that to make me confident in terms of if the company's going to perform well. And I go over here and I plot it all. So I go to every single 10Q and I put the numbers here, because what I'm trying to look for is I'm trying to look for a trend, okay? I'm trying to look for a trend because people lie, but the numbers don't lie. Well, numbers could lie, but then they're committing fraud, which is another story, okay, guys? Because people lie, numbers don't lie, okay? So the numbers are very important. So I'm going through the numbers, okay? These are the gap metrics. I'm looking to see how, gross profit is in relation to costs, whether, costs are going up faster than revenues, etc., etc., okay? I'm looking for any weakness or any anomalies in the trends. Also, I'm looking for the changes in the non-gap metrics, which I believe are even more important than the gap metrics, okay? So we're talking about, in terms of Boingo, number of venues, number of nodes, okay? Number of military beds, number of connects. These are all things that drive the gap metrics, all right? I'm also looking at how they perform, according to guidance, all right? When did they beat? When did they miss? Why did they beat? Why did they miss? I'm always asking the question, why, how, because, again, this really helps us to give a picture not only to how the business is performing, but the integrity of management, okay, guys? Because if a management team continues to, do what they say they do, then you've got a winner that they're going to do what they say they do and then send the stock price back up, because it's down so much and people don't believe them, okay? Also, as you guys can see here, subscriber base, right? I'm also looking at other important metrics like their partners, okay? So I'm looking at the economics of the business. And as you guys can see, if AT&T, Sprint, Verizon, T-Mobile, with their deployment of 5G, if they do well and they're aggressively going after it, then that means that they're going to be needing services from Boingo, which is going to help their revenue, okay, guys? So, look, I'm not going to spend too much time on the spreadsheet, but this is what I mean by it's very labor-intensive, it's very painful, but you need to do it to get visibility. All right, guys, now we're on to step 4, okay? And step 4 is the final process where I put together my hypothesis and the numbers backing my hypothesis, and I do independent verification and validation, okay? And what I mean by that is I am looking for evidence that's not from the management, okay? So I'm looking for, non-party evidence or third-party evidence that this company is going to do well. And for me, what really made the investment thesis was I found 2 things, okay, guys? I found the full board meeting of the big MTA deal that Boingo signed, and then I dug all the way back to pre-9/11 to one of their agreements that was made public, where they were still, where they were doing like comms for the New York, Trade Center and the towers and whatnot, okay? And this is what I was looking for, okay, guys? I was looking for the full terms, and sometimes you won't find this, okay? This took me like 20 hours to find, and it was like a 300-page document, so I had to pretty much read all of that, okay? It was absolutely painful, but look, again, I'm looking for things that help me corroborate as to why this company does as well they say they are, okay? And what really made it for me was this, okay? This was an extract from the board of the MTA Transport Association of New York that stated that despite Boingo not being the cheapest solution, they were technically the most sound and the most credible, and they were the most able to deliver this, okay? And when it comes from a board, as you guys can see over here, of some very, very important people, hang on, where is it? Some very, very important people. There we go. You've got the chief legal officer, the chief financial officer, the chief of staff, and the chief development officer, okay? When you've got these very high up important people agreeing that this is by far the best solution, even though they're not the cheapest, okay, this is what made the investment thesis for me. So, we've got the sentiment is wrong, the management teams are doing well, okay, their partners are doing well, and then we've got other people saying they're the best, okay? So at this point, you guys might be thinking, Well, okay, if this company's so good, why did you sell Boingo? Okay, guys, and so this is where I differ from, sort of your core traditional deep value investor. Okay, guys, if you were to ask me to describe my investing style, but it is a bit like trading. Okay, if you guys were to ask me to describe my investing style, I would say it's probably closer to swing trading than it is to investing, but it's more like fundamental swing trading. Okay, guys. So that sounds like a mouthful. So just to simplify that, it is literally buy low, sell high. Okay, I'm literally buying low, and I'm literally selling high. But when I'm buying low, I'm not buying low on a PE or EV, EBITDA, or any of that basis. I'm literally buying low on a price compared to past price basis, on the assumption, based on research, that they are going to perform well because the reason why they're low is wrong. Okay, guys, so this is very, very important. And as you guys can see over here, if you look at Boingo, you can say, well, why don't you do a buy and hold? Well, you get in and then you get out for a 50% gain, then it tanks. Obviously, that was because of the coronavirus, so that was, that was a special situation. But, you get in, get out, okay, guys? Because, look, based on my research, 70-80% of a stock price's movement is sort of within 3 to 6 months. Okay, guys, and yes, you have some special cases like Amazon and Afterpay and all of that, which that's a different story. But if you look at the majority of stocks, there's only a unicorn's called a unicorn for a reason. Okay, guys, you've got unicorns and then you've got zebras and horses, and what I'm trying to say is this is my strategy for compounding. Okay, I'm looking for stocks that will go up in a short amount of time, and I'm looking for many of them. Okay, so some people can say, look, you buy Amazon and you let that compound. That's cool, but you can also do this. You can also buy many Boingos, right? Imagine if you buy 10 Boingos a year and you get 50% each time, well, you've got 500% return. So guys, I really hope that helps clarify for you the way that I pick stocks. And again, guys, this seems like a lot of work, but it is very beginner friendly, because if you think about it, anybody can do this. You just have to put in the time and the effort to grind it out, okay? You don't have to have an accounting degree. You don't need to know how to do a discounted cash flow. All you need to do is to know how to do your right research and understand how businesses work. So with that, guys, I want to conclude the video by reminding you of a few principles that I follow when it comes to my investing or swing trading or whatever you like to call it strategy, okay, guys? So rule number 1. Never ever fall in love with your stocks, okay, guys? Remember, this is not your company. You do not own it, okay? It's just your turn to ride the roller coaster, all right? And Warren Buffett, the GOAT, the greatest of all time, he says it perfectly. A stock does not know that you own it, okay? So, there's no point falling in love with stocks. And again, guys, you can say, look, buy and hold, but for me, I prefer to take the money and run, right? I get in when the times are good, and then I get out when the times are still good, and then by the time when it's not good anymore, I've already taken the money and I reinvested it somewhere else to ride that wave again, okay, guys? So I'm constantly partying, all right? I'm going from one party to the next party, get in when it's good, enjoy the party, get out before everybody leaves, go to the next party just as it's starting, and over and over and over, okay? So it's a never-ending party in the stock market. All right, guys, so look, that is the end of the video. I really hope you enjoyed it, and, ask me any questions. If you have any questions, drop it below, or like I said, guys, feel free to join me on Hatch. We've got a Facebook page of about 4,000 odd members, and I'm happy to answer any questions over there. If you don't want to post a comment to my YouTube publicly, but you want to contact me at Hatch and send me a private DM, no worries at all, okay, guys? So, look, guys, until the next video, happy investing.